So this is my stock portfolio as a 16-year-old. This is what it looks like. First, my I use Cash App to invest because it's easy and everyone in my generation uses Cash App. These are the companies I own slash ETFs from my largest holding to my smallest, starting with SCHD. I put in there's a total of $40.25. I have 1.4 shares. JPIE total money in there is $31.70. I have half a share. DraftKings next with a total of $23.81. Shares zero point 0.4. Next is Robinhood at 13.69. Shares is zero point 0.2. After that is Meta. Total is $13.53. Total shares is 0.018, and Apple total is $1.71. Shares is 0.0069. I know it's a very low number. I'm going to be investing. I know it's a very low number, but there's a reason why there's not a lot of money in there. Why did I choose these to invest in? First, I chose SCHD because it's a quarterly dividend paying ETF that tracks the Dow Jones US Dividend 100 Index. The recent dividend yield is 3.59. This is a very popular one. Many people know about it. It's consistent for paying dividends. It does really well, and it's just a really good one to invest in. I chose J. Oh wait, that's spelled wrong. Hold up. JP JPEI. It's a monthly dividend paying ETF that tracks the US large cap stocks. The recent dividend yield is $7, 7.18. Very massive. I chose these two because add them together, I guess monthly I should be getting like point up 1% or a bit more. And they're both really good. They both do really well together and just money. It's kind of like free money, but not really. Okay, the companies I have: DraftKings, the largest sports betting app in the United States, of course, has no dividends. Robinhood provides commission free trading for stocks, option, ETF, and crypto. Apple, the first company to reach $1 trillion market cap, one of the best cash flowing businesses in the world. Everyone knows about Apple. They pretty much print money every quarter. And finally, Meta, a social media platform that old people use and one of the wealthiest companies in the United States. Okay, let's go into my first company, Charles Schwab Dividend Equity. I own this. This is my most, I own the most shares in this because it's a good one. I'm trying to have, I'm trying to have a low risk. I guess because I'm young, I should have high risk, but I just don't want to risk too much right now. Okay, let's break it down. So they have finance, healthcare, energy, and technology stocks. They have Cisco, Coca Cola, Pfizer, Chevron, Home Depot. These stock is very well diversified. I'm not scared at all that anything is going to happen. I know that it's a good business and nothing should worry about it. Nothing's too scary. The dividend yield, if you own one share, you're going to get about 99 cents, which is all right, pretty good. Dividend growth is around 12.21. Um, from 2020 when this ETF started to now, it's been growing consistently, and I'm happy with that. I really started investing right here, beginning of January 17th. However, I'm going to hold on to it, and hopefully it goes up. So the next one is JEPI, JEPI, JP Morgan Equity Premium Income ETF. It's one of the highest paying ETFs on Cash App. It invests in the S&P 500 and sells options. Perfect. It sells options, and that's how it really pays off its dividends, by selling options. This one is also very well diversified in technology, healthcare, finance, and a bunch of others. They have companies like Meta, MasterCard. It's kind of like the QQQ, but QQQ is a bit lot riskier, and I don't really like it because it only invests in the Nasdaq companies. This one invested more, so I'm happier with this one. The growth dividends has been really good. It kind of taken a dip, however, it's fine for right now. I know it's gonna keep on growing. The stock has been going up. It's a well performing stock of mine. Not the best, but it's all right. Okay, I think this is my best performing stock. I have Robinhood. I bought it sometime 2 weeks ago, and because I thought of it as a good earnings, and I saw like it was kind of like gut intuition. However, I liked where the company was. I saw the earnings, and I believed and I understood that with this Trump administration, crypto has been booming. People have been using crypto, so I kind of knew that would go up. So I bought it, and earnings came out, and it just went absolute crazy. I think around it was at $40. Now it's at 55. It keeps on growing every day. It beat expectations massively. People are expecting the EPS to be 52, but it was a billion. It was $1. People expected this, however, they got this. Surprise was at 99%. Revenue did very good. People expected 900 million. They got a billion. Very good. I'm very happy. It. I hope it keeps on growing and growing and be keeps on earning me money. Okay. The next one, DraftKings. DraftKings is a good one. It's my second best performing stock. I s- I picked it because if you look at how our world is going, we're going into more gambling and s- gambling and sports betting, which I don't like. It's very sad. However, you just have to deal with it. So I knew that in our economy, stock gambling is very massive. So I decided to put in money to it, and DraftKings has the largest market share compared to MG, largest market share in sports betting. So I put money in there, and it did quite good. The earnings was today, and they went up to about $50 somewhat, and they did very good earnings. I've made money from it. They beat expectations for the most part. Um, not they didn't beat every expectation, but they beat expectation, and it's doing very well. I'm happy, and yeah, my second to last Meta. I don't own a lot of Meta, however, the little bit I own, it's good. It's growing. It's doing a fantastic job. It's like almost always up for me. I almost never lose money, and then I'm happy. That was one of the first companies I bought. Yeah, Meta. Yeah, the revenue is pretty good. The net income is pretty good. Okay, I'm gonna be so honest. I don't really understand everything here, but I understand some. For example, the long term debt was at 28 billion and 28.83 billion, but they have more money to compensate it and more cash flow, so I'm happy with that. Yeah, I don't understand everything, so I'm going to leave here quickly so I don't have to explain it. And finally, Apple. Apple was a titan in 2024, 2023. It keeps on beating expectation, of course. However, it's the smallest share I own because it's not growing as much as I want. I know I said I wanted low risk. However, I still want to get high returns, and Apple isn't growing as much. They beat expectations, however, not by as much as I would like them to be. They're facing a lot of competitors in the phone industry. So here, as in Xiaomi, uh, the new phone. I don't know its name, how to pronounce it, but Dell, and they're facing a lot more competitors. Don't get me wrong. Apple is a fantastic company. However, there's just so many competitors and other things I'm not liking from them. So because of that, I'm keeping very low amount of money in Apple. I know it's a good company. However, right now I just don't want it. It's not growing as much as I would like. And yeah, that was the end of my stock analysis. Thank you for watching. If